Hey everyone, I'm Charting Man Dan with the Chart Guys. I've been trading the last 14 years full time. We have volatility still sky high. We're going to check in on the markets after the bulls started strong, but then rolled over with a full bear control day and a close near the lows. We'll look at what we're looking at for the rest of the week and check in on the Japanese yen and the impacts it's having on the market. So before we get to the charts, I want to just talk a little bit about narratives and fear and correlations. Fear strengthens correlations. Narratives strengthen correlations. We have the clear narrative about the Japanese yen carry trade, blowing people up, liquidations, and all that. As long as that happens and is in the spotlight, that's going to strengthen the inverse correlation between the Japanese yen and the US stock market. And I expect through the month of August that that correlation will continue to fade and weaken, and the spotlight on that narrative will continue to fade as the news cycle moves on to other things as well. This is the way that it happens. We saw it the same way with the fear spike when regional banks were collapsing. Regional banks and Bitcoin went inverse, and every time a headline came out, they instantly would go tick for tick inverse with each other. And now that correlation, I don't even look at it because it's no longer existent. It was there because the spotlight and fear were put on it. People were told about that inverse correlation. And then again, it just disappears as it fades away. So I expect the same thing to happen, but it's still fresh enough and people are still talking about it enough that it is prevalent and still worth paying attention to. So we knew that the result of this current bounce, the most likely scenario was a daily lower high. And if you know our style of analysis, it's determine the most likely scenario, and then you zoom in and you look for patterns or clues that is shaping up. And so we started this morning with a very surprising overnight recovery. Yesterday after hours, SMCI, the semiconductor, had a very clear rejection from resistance. Couldn't be more clear. This was an easy one for bears. Trading is not easy. Sometimes it is easy. Anyways, it was an initial bullish reaction. It then rolled over into significant weakness, concerns about margins, yada, yada. I have not looked at this chart in 2 weeks at least, and I saw the earnings reaction was a straight shot up. I pulled up this chart. I marked out 725 to 730. I said that is a very clear resistance zone that aggressive bears are going to be looking to top fish. And then you got your 1 minute stair step. And the 1 minute stair step triggered bear at 716, and we then dropped $200 from that high. So it was a very, very clear rejection from resistance. And again, it took me 30 seconds. I pulled up the chart. 30 seconds later, I could see the bear trade staring me in the face. I didn't take the bear trade. I wasn't ready. I wasn't sitting here waiting for the earnings. Obviously, it's very high pace, fast-paced reaction. So didn't make any money off of it. But it was just a very clear trade. And that led to a decent bit of weakness in the semiconductors, and it was the semiconductors dragging things down today. We'll get to that in just a moment. Anyways, the pattern. What was the pattern? For the last 2 days, we've been watching hourly rising wedges on our indices. The Russell had it. The S&P 500. Initially, I had it about here, had to adjust a little bit after the overnight move. So there's the rising wedge there. Here's your NASDAQ rising wedge on the hourly. Why do we scout a rising wedge? We know the daily lower high is the most likely scenario, and we see bull breaks lacking follow through. So these rising wedges have now all confirmed. Here's RTY for the Russell. This one confirmed the most clearly. But they're just beautiful, clear patterns guiding us in the most likely scenario. I put out a video for Chart Guys members this morning where I said, we have a clear resistance level to be watching first thing for aggressive bears, the high of yesterday. But do not lose sight that even if we break that level, we know a daily lower high is still the most likely scenario. So we break the high of yesterday, we go nowhere, and then we roll over. And it was the semiconductors rolling over that really set the tone. So is the bottom in, or are we headed lower? We're going to know a lot more by the end of this week, the next 2 trading days. What we can say is we're on the verge of setting the daily lower high on SPY at 531.59. And if we drop down and break 510, it's, the bears still have complete control. And that would be continuation of the daily downtrend. Best case, of course, for the bulls is hold the low and break the high of the bounce. And that would be a big sigh of relief. And that would shape up the weekly bounce to get going if the bulls can pull that off. What the bears still need to do is confirm an hourly downtrend. Hard drop yesterday didn't confirm the hourly downtrend overnight, bulls fully recovered, as the Japanese market the last 2 days has V-shaped and recovered a good bit. So tomorrow, what the bears want to see is a confirmed hourly downtrend to confirm, yep, no, we are in control, establish some new resistance levels nearby, and the Nasdaq's the same. Well, one difference is the Nasdaq broke the low of yesterday, whereas the S&P 500 did not yet. So Nasdaq daily lower high is officially set 449. Can the bulls hold 423 and break that lower high? That's what the next 2 trading days are going to tell us. Same deal. Bears need to confirm the hourly downtrend. When you do these straight moves, it's easier to retrace because you're not grinding down and building resistances on the way down. But lots of space for an hourly lower high attempt as a result of the next bounce. So semiconductors. I was shorting the semiconductors today, and it took all of 14 minutes to determine they were a lead bear. How did we identify that they were a lead bear? So 944 SMH. This level to the downside would fill the gap from the gap up open. It's weaker than QQQ since the open. Bears need to confirm the 5-minute downtrend to follow through. So how do I recognize the relative weakness? We open, we drop for the first 15 minutes, hitting a new low. QQQ, what do we do in the first 15 minutes? We go up for the first 15 minutes. That right there tells me big tech is holding on well. Semiconductors are clearly weaker. And from there, I missed what I wanted was to short that 5-minute lower high. And the trade here would be wait for the bounce, short it, put your stop over the high. If we confirm the downtrend, bears confirm their full control. If we stop out, we know we haven't topped yet. And the risk and reward is favorable for that lower high. I missed it. I got the 15-minute lower high here. So we then had the weakest major sector that we're watching, significant bounce. I was actually anticipating a tightening 15-minute range and an equilibrium, but regardless of whether we hit the lower or lower, we tighten up. I know a 15-minute lower high is most likely. So I know the most likely scenario. I zoom into the short-term time frame. I look for a bearish pattern that tells me that that most likely scenario is shaping up. 2-minute head and shoulders watch for the 15-minute lower high. I draw out what it could look like. I will probably make a 2-minute lower high top fish attempt as I'm about to be gone for an hour or two. I want that protection in a short position. And that was right here. So we had done this, and that's when I made the post. We didn't get much of a right shoulder. I think I had drawn it like that. It ended up being like this. But as soon as we see this weak bounce and roll over, you can put a stop there. I was using the 15-minute. I put my stop there, and it was nothing but bears from that point forward. When that 15-minute lower high was set, that's when the Nasdaq rolled over as well. The semiconductors dragged the Nasdaq down. It was a 15-minute double top at the high of the day, nothing but bears from that point forward. We had all major sectors hit the low of the day at the same time. I was watching this dump on the Nasdaq. I wanted to play this bounce in the afternoon. I didn't because of the rule. If all major sectors hit the low of the day at the same time, I'm not looking long that day. And sometimes we would have gotten a bounce with follow through and I would have missed it, but more often than not, it's going to protect you from fighting that momentum. So semiconductors leading the way down. And that's now my protection position. I did swing some. Bearish engulfing candle. Daily lower high is set. Our new most important resistance, 226.10. And now it's all about 200 psychological. The range is the volatility we're seeing. I mean, NVDA, again, with a 10% range on the day is insane. The semiconductors ETF, 3 times leverage, SOXS, had a 23% range on the day. NASDAQ, 3% range on the day. I feel like there were weeks recently where the NASDAQ didn't do 3% in range. It's just massive volatility still. Tesla, very clear level for bears to play off of. 203.88, 202.90, and today we topped out at 203.49. So again, was able to say, I don't have the post up, but early in the morning, relative weakness in Tesla. Bears have a very clear level to be playing off of with those rejections. So we top out from that resistance. As soon as you hit the new low of the day, that is a confidence booster. We are more likely to follow through with that rejection. You hold that low of the day, you're going to keep battling. But as soon as you break that low, you give the bears some momentum. Same deal, daily lower high. Well, actually, we didn't even really get any kind of meaningful bounce for a daily lower high. We know where resistance is, and we're looking down at the low of 182 as support from here. Healthcare, daily lower high and lower low. We dropped straight from the all-time high. We now have a confirmed daily downtrend. We zoom out to the weekly. Now we watch the weekly trend. It's still a weekly uptrend at this point with 142.73 as the most important level. But bears got the check mark on the daily. Financial sector, lead bull on the morning, solid bounce on the daily, right off EMA 12. Again, same thing. Bears need that hourly downtrend to officially set that daily lower high with conviction, but looks like it's shaping up. Again, the question from there, do we drop to lower lows? Can the bulls shape up the daily uptrend to save the day? IWM, that rising wedge broke bear. Daily lower high likely shaping up, not official. Hourly downtrend needs to confirm. Again, same thing on so many of these names because we were all correlated on the drop down. Just an hourly stair-step drop on those rising wedges confirming. And again, those rising wedges, that pattern's now done for me. We've moved on. It no longer exists as far as I'm concerned. For me, the purpose of that is scout the daily lower high. And so it's now served its purpose. That doesn't mean because there were rising wedges, we're heading to lower lows. Now we zoom back out to the daily, and the daily tells us each day probabilities of whether a lower low is coming or not. I believe we'll need some high bear volume to drop to lower lows from here, but we could get high bear volume. We have to keep an eye out the next 2 days. The VIX, trying to bounce off daily EMA 12 for a higher low. So we kept bleeding a bit, but off the low, solid move. Can the bulls confirm an hourly uptrend? We know a daily lower high is going to be the most likely result of this bounce. I am 10 times more confident saying a VIX daily lower high is most likely than a NASDAQ daily higher low is most likely because of the space to work with here. Just keep in mind that the broader market can drop to lower lows, and as long as there's no massive follow through, the VIX isn't going anywhere near 64, 65. So if you're a broader market bull, you want to see a weak bounce on the VIX and then keep bleeding. So the Japanese yen. So we're pretty inverse to the broader market. Although if we were really, tick for tick inverse today, we would be a long lower wick closing up near the high of the day. What's important for me here, again, I'm not going to be watching this every day because like I said, I believe that this inverse correlation is just going to fade and become less and less important. But what I care about is, does the hourly back burner mark the daily higher low? And I'm viewing this chart saying, imagine I have huge amounts of money short the Japanese yen. How do I feel right now? How am I analyzing this chart? And it's just a tightening hourly range right now, but the key is, does that hourly oversold mark the daily higher low? If it does, this move can keep going. If I'm a broader market bull, I want to see this hourly oversold not mark the daily higher low, because that would then increase probabilities that a temporary top has been set. So again, I use the back burner strategy even when I'm not placing a trade. I'm not trading the yen. I'm just using it in my analysis, imagining if I had a position, what would I be thinking if I'm bullish this chart? What would I be thinking if I'm bearish this chart? The dollar, daily bounce underway, lots of space for a lower high. Gold, tightening up on the daily, heading towards support. So still hanging on, but bulls want to set that daily higher low soon to try and keep tightening up. Silver, as we know, has been much weaker than gold. It's already down at the lows. We have this previous resistance zone now trying to hold as support. We're coming back into it. If there's any spot to form a monthly higher low, this is the spot to do it. But no sign of the bulls on silver at this point. Oil, weekly higher low trying to form. I would love for this to tighten up another month plus. Next step, we have to confirm a daily uptrend. It's still a clear daily downtrend. We need the bounce, top out, higher low, higher high for the weekly higher low to gain more confidence. 1 day at a time, tons of volatility. Got to protect your positions. Trading overnight, tricky. Again, yesterday, if you told me yesterday after hours, what's the probability that we're going to open at the high of the day tomorrow, when yesterday after hours the NASDAQ was down at 435, I would have said 10% or less. And yet we did it, because in a highly elevated volatile environment, less likely scenarios, things you can't think aren't going to happen, can happen. So you got to be protective. So I will be looking for potential longs for higher lows, using the recent capitulation lows as a guide to tell me if I'm wrong or not. But, the position I've got now on SOXS, short semiconductors, that's just going to be a protection position. I'm just going to stick my stop over the high of today, risk-free. If we gap, there's risk, but, break even is up around that level after taking some profit into the drop. And we will see. It's important next couple of days. I'm about to be living out of a van for a week and a half with slim to no cell service, hoping things can settle down a bit before then. Hope you're well. Do good things. I've got no end of the day video here. We got baby bunnies in a raised bed. A couple baby ducks were abandoned, so they're now pond pets. Giving them some morning snacks. Heading to Oregon. Hope you're well. Do good things. Protect both directions. This is an unusual market environment. Been saying that for over a year and a half at this point. See ya.